Today, we're going to talk about why saving money is a horrible strategy. In fact, saving up piles of cash might be the least financially intelligent thing that you can do with your money in 2024 and 2025 and beyond. Here's an interesting statistic. According to NerdWallet survey, nearly 90% of Americans save their money on a regular basis. But interestingly, only 45% of people would be able to cover a $1,000 emergency without going into debt. So clearly, saving money isn't working for most Americans. These are the major downfalls of saving money. Interest rates, they're too low to help you accumulate any type of significant return. I mean, just put your money in a traditional savings account at a bank and you're getting like 0.001%. It's awful. And the traditional annual yield is only about 0.61%. It's terrible. And many banks are offering rates really, really low. Much like most financial advice that is circulating today, the idea of saving money is outdated. While the 1980s and 90s, savers may have collected anywhere from 5 to 8% interest, it's just a different ballgame today. So saving money in a dusty old savings account isn't getting you anywhere in this economy. Inflation eats away at most of your account anyway. So if you have money in a savings account, I'm sorry to tell you, but you're actually becoming poorer every day. And you're like, wait a second, that's ridiculous. That sounds like a fabrication. But think about it. If inflation rates are 4, 5, 6%, and you're making 0.001%, what's worse, right? What's higher? Inflation. So your US dollar is going down in value every day that it sits in that savings account, right? When inflation occurs, the purchasing power of your dollar decreases. So the prices of everything is rising. Your dollar is worth less sitting in that bank account. The inflation rate in 2023 was 3.4%. So unless your savings account has rates above that inflation rate, you're losing money. I mean, that's simple math. Fiat currency or government money always fails. I want to remind people, every government currency in world history has collapsed, okay? Every government currency, that's fiat currency, F-I-A-T. It always fails. History has proven this cycle again and again and again. What makes you think that the United States dollar is going to be somehow different than every other currency in world history? Governments print too much money. This is exactly what the Roman Empire did. They created inflation to fight all of their wars. Sound familiar, by the way? The currency can no longer stand as a store of value, and all of these countries now are dumping U.S. treasuries in debt because they don't want them. They're creating their own currency to settle transactions. Look at the BRICS nations right now. China's dumping U.S. treasuries, and Russia, China, and India, South Africa, they're all coming together to form their own currency away from the U.S. dollar. See, the writing is on the wall. So you can find instances of this throughout history. I mean, Germany, World War I, post-Soviet Russia, collapsing, Imperial China, more. In the United States, we've already abandoned the gold standard in the early 1970s, so we're essentially on the fast track to the destruction of the US dollar. Storing up government-based currency can never result in building wealth. Next, you can't build wealth by storing up dollars that are losing value. A pile of cash isn't going to get you very far. Even if you're able to build up a substantial savings account, at the end of the day, it's still a finite amount of money. A pile of cash, like if you think like Scrooge McDuck with his pile of coins, right? A pile of cash can only cover so many expenses. But you need streams of cash that are continuously bringing money into your family, not one pile that you deplete. So what can you do instead of saving money? Well, here are a few ideas. Only park your funds in accounts that can actually keep up with the rate of inflation. There are actually some high yield savings accounts out there. The drawback is that many of them are online. They don't have physical branches, of course. Some of them require high minimum balances to claim the higher interest rate. If you must use a savings account, shop around, make sure your rate is higher than the inflation rate. Then try alternative accounts like investing in short-term real estate notes. Now, I covered this strategy in depth in a video that I did called 4 Investments That You Can Make in 2024. We'll link it up in the description. But here's a quick summary of that video. Investing in real estate notes can actually offer returns much higher than what you'd receive with a traditional savings account. And the commitment is between 6 and 24 months, not a long time. Check out that video if you're interested in using this strategy. It's a great alternative to putting your money in a savings account. Next, create streams of income, not piles of cash. Think about ways that you can create multiple streams of income, whether you're an entrepreneur, a real estate investor, or an employee. It's important to create multiple revenue streams that can support your lifestyle, cover your expenses, and keep you out of debt in the event of a financial emergency. Investing in performing assets, hard assets like rental properties, are the number one way to build wealth in this economy. And there's no better place to invest cash than in a piece of real estate that is a hedge against inflation. When you own real estate, you're actually building your net worth and creating cash flow every single month. We'll get back to that video in a minute. But first, inflation is out of control and you've got to protect your money. Any money you've got sitting in your bank is losing value every day right now by around 3.5% to 4%. And if you want to protect your money and grow it, you need to put it to work by investing it. Now, I'm not talking about risky or volatile investments like stocks or crypto, which I like, by the way, but tangible assets that you can actually put your hands on, okay? And the best tangible asset that you can invest in right now is real estate. It's the number one hedge against inflation, and it offers some of the safest and highest returns. I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. Now, I got into real estate after learning that it was a favorite among the wealthy, and now I know exactly why. Personal experience has proven that it is the number one way to build and protect your wealth. I'm here to tell you that, folks. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build to rent model offers the most benefits by far. We're talking new construction, single family buy and hold real estate. Build to rent properties. They offer more tax benefits, fewer headaches than rehabbing an existing property. There's less risk. There's way less risk than flipping houses. And they're a lot less work than wholesaling houses. And they're less turnover and fewer issues than multifamily houses. When you invest in build to rent real estate, you're getting 4 streams of income: appreciation and equity gains, principal reduction in the mortgage, tax benefits, depreciation, and monthly cash flow, my favorite. Now, on top of that, you're using someone else's money, the banks, to invest, while someone else, your tenant, is paying for it. That's just one advantage it has over other tangible assets like gold and silver. You can't buy gold with the bank's money and have someone else pay for it, can you? No, you can't. Plus, when you're strategic about leveraging, you get 4 to 5 times the assets you can invest in. And it's the only investment that gives you 4 to 5 times protection from inflation. My company, Morris Invest, along with the help from our team at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. Because we buy and we build in bulk, and then we pass our savings on to you. Makes it a lot simpler when we're building 40 properties at one time. We're able to buy 40 furnaces, 40 water heaters, and be able to pass that savings on to you. Now, we offer free phone calls to create a personalized investing plan. But before we agree to talk to you on the phone, there's just one thing you need to figure out. There's one number that you need to calculate before we'll even talk with you on the phone. It's your freedom number. Your freedom number is the amount that you need to fully replace your current income. But it involves more than your monthly budget. My wife Natalie and I created the Freedom Number cheat sheet after a brush with job insecurity and realized that we were tired of depending on our paychecks just to get by. And then we achieved financial freedom and now make more than we did at our jobs through the monthly income that we get from our rentals. Now, we'd love to show you how to do the very same thing. Now, I made a quick worksheet that walks you through the process of finding your freedom number, which you can download for free at the link below. And I'm also going to send you valuable content that shows you how to identify a smart investment, what it takes to become a successful real estate investor, what you need to get started, and where to get a strategy that best fits your goals and situation, and how to get free ongoing help. I'm going to send all of that to you, okay? So click the link below to get your freedom cheat sheet right now and start protecting your money today. Next, commit to building your financial intelligence. If you're falling prey to traditional financing advice like, hey, put your funds in a savings account or invest in a 401k, then we've got some work to do. Okay, that is terrible advice. Traditional financial advice is outdated and it's all backed by Wall Street where they make a lot of money off of your stupidity, okay? It's not serving anyone. It makes them rich, not you. When you look at the numbers, it's clear saving money doesn't get you anywhere. The 401k doesn't fund a comfortable retirement. And the middle class, of course, is disappearing in the United States. It's time to forge a new path. We can't wait around for these old systems to change. They're clunky and old, but they're not going anywhere. We have to become financially intelligent. financially empowered, and we have to take matters into our own hands. I hope this gave you some insights into why saving money is a terrible financial strategy. If you're ready to continue building your financial education, I want you to check out this next video. It's called Secrets of the 401k That Are Destroying Your Retirement. So thank you guys so much for subscribing to the channel, and we'll see you next time.